Hello traders, how's it going today? And today is 30th of August 2019. I'm here to bring you some daily market update. Like I was speaking about the candle closure below the 100 moving average on the day time frame, we certainly had a follow through. Yesterday's candle closure was definitely a continuation of the previous engulf to the downside. Starting off with the momentum oscillators, actually today stochastics still are headed down, and I don't think they should head down further, but they do seem to have a little amount of room left with the downside. Of course, the EMA is quite divergent from the RSI, so we do have a little bit of downside room to go. Like I said, any movement upward is likely to be a sell all the way up until 10,070 regions. 10,000. We need a candle closure above 10,100 on the daily time frame for any invalidation of this current bearish structure. Just taking a kind of resistance line, more or less. This is the structural line I'm talking about. First rejection, second, third, and we could be looking at another retest, and this should be by definition a bearish retest of the 100 moving average, coinciding with this entire structural resistance. So we do want to put a candle above it, close above it, and then we can look for any movement upwards. Until then, the structure stays bearish, the auxiliary stays bearish, everything is pointing downwards. Okay, so I have a few interesting things to talk about today. One of them are the Fibonacci moving averages. So I'm going to be comparing the Fibonacci moving averages with the previous bull market and figure out where all we could have bottomed out and what was the extreme downside range in terms of these moving averages, the Fibonacci moving averages. Taking a look at the previous bull cycle. So if you notice, every single time we try to close a candle below the last Fibonacci moving average, which is apparently 1.414. So that is supposed to be a bottommost area. So as Bitcoin progressed parabolically last year, any movement downwards was just stopped at the end of this Fibonacci EMA, and we never saw any kind of candle closure below the last moving average. So this thing has been working absolutely fine for the past cycles, right? So we had one candle closure, one huge capitulation candle, and then it was just immediately followed through by another candles, and the price action was just simply put above the last moving average, and we simply headed up and higher. Same goes for these regions. Never close the candle below the last moving average, closing a candle below and immediately getting picked up. So yeah, you can see pretty much how price action behaved. Look at this is somewhat perfection. We had a massive dump and a follow through, but the candle was never able to close below the last moving average, and up and onwards after that. This is from 16 July 2017, almost 2 years from now. So as you can see, the particular EMA has been supporting the price action beautifully, right? So where do we stand right now? We do have some space to go, and the last moving average for this entire EMA structure stays at 9,000, which is again this is coinciding with the weekly 21 moving average and a few supports in the 2-day moving average, I think so, right? So we do have amazing, major, massive support areas all the way at $9,000. So I can expect a good bounce from those regions, and we can really expect candle closing. I mean, like any bearish attempt to close a candle below this entire ribbon structure is going to be supposed to be get bought back up, since the demand is supposed to be high in these regions, right? Anyway, let's see how these things will play out, but I thought this EMA according to the Fibonacci sequence was pretty interesting to have a look at. So that's what I was here to share today. Anyways, that's been it for today's update. Nothing much happening in the market, and trade carefully. I'll see you guys in the next one. Thanks for watching.